This is Daniela Cambone for StansberryInvestor.com, and we are continuing with our summer series. Today, we are talking crypto transactions, which are on a tremendous rise here. They're growing at a speed we can't even keep track of anymore. So what does this tell us about people's habits when it comes to cryptocurrencies and the traditional notion that we thought they were all hodling? The numbers prove otherwise. And joining me today with some exclusive data is Jason Butcher. He is the CEO of CoinPayments. They are one of the world's largest crypto payment processors with over $1 billion valuation. And he's joining me today. Jason, good to see you. Welcome to StansberryInvestor.com.
Daniela, great to be here. Nice to be here today.
And I want to thank you because you've come with some incredible data that you're going to be sharing firsthand with our audience here. The numbers are incredible, Jason. If we're looking at the first half of this year, and this is what the summer series is all about, it's a touch base halfway through the year here. What your company, CoinPayments, is tracking is transaction volumes at nearly 3 billion. That would be up 200% from the year prior. What is this telling us?
Well, I'd say that, from our standpoint, when it comes to transactional elements, we're seeing a massive growth period with adoption. So the last few years, we saw a lot of growth for sure. 2017, we saw a lot of transactions, mostly happening in sort of the investment space. Today, we're seeing the growth in massive adoption with retailers, online and offline, both with POS terminals as well as online transactions. And the growth has been mostly with merchants who've been open to accepting crypto for the last few years, but even new commerce and new businesses that are coming online. Conversations that we're having today with organizations and groups from payment service providers to organizations that provide wallets and digital payment solutions just wouldn't have happened 3 years ago or even 2 years ago, especially, 3 years ago. 2 years ago started to last year, and this year we're just seeing a massive growth.
I think that's what's incredible about companies like CoinPayments is that, offline we were talking about how you can help like a mom and pop store or someone that was very local become a global phenomenon. It's incredible, right?
Absolutely. We see more partnership things happening, such as like our recent connection with OVVI and one of our POS terminal providers who really, they service the mom and pop retailers. Of course, they also provide online services, but really their integrations recently have been all focused on the demand from their retailers requesting the ability to accept crypto from their shoppers.
And I know that you really, base the premise on the business. You guys are crypto agnostic, but I do want to get your thoughts or just some ideas as to why you think people are spending more and more of their crypto. Because like I said at the start, a lot of people think, well, why wouldn't I just be holding on to my crypto? Shouldn't it just be an investment vehicle where I can make my money keep growing and growing?
Well, I guess, and how I look at things is if you speak to an investment advisor, they're going to tell you to buy and hold something specifically for a long period of time. Gold was always used as that buy and hold stuff. Silver, for example, was always the people's money, right? You would buy silver or receive silver and pay out. And in crypto, it's sort of the same area. Some are great for investments and great for holding. But if you're going to use a digital form of transfer of value, crypto allows you to do that instantly and quickly, allow you to verify those transactions quickly.
But if we look at the top three coins that are being used, CoinPayment shows Bitcoin as the number one most transacted, correct? Does that surprise you?
It doesn't surprise me. It's always actually been like that. In fact, we've had a reduction in the usage of Bitcoin in certain ways for transaction numbers, not necessarily a reduction because of course it's grown significantly, but in our percentages, Bitcoin today is about an 80% of all the transactions, where it used to be about 95% of the transactions. So we see more transactions that are starting to happen in stable coins and other crypto. But I think the main point though is that if you are an individual and you're holding cash, you're holding a credit card, you're holding checks, you're holding whatever the method is that you have in an asset and the value to pay somebody, do you have crypto? If you have crypto and the end person is willing to accept crypto, most likely you're actually going to use crypto to make that payment. So, and our average transaction is about $300 in transaction size. So, if the difference is up or down a few percent, a difference in that $300 doesn't really change a
So
lot.
that's a good point you're bringing up. You are actually tracking that the transaction size is growing, what people
Absolutely.
are willing to buy with their crypto. So I want to know what that tells us, and also the biggest growth sector you're tracking is e-commerce.
Absolutely. E-commerce, I mean, the financial side in e-commerce is happening so tremendously. I mean, the digital transactions for infrastructure is growing tremendously. People who are paying for hosting and web services and platforms. The growth that we've seen in transactions with Shopify, for example, we've seen over 10x in the last year just with Shopify merchants alone in the transaction volumes.
So, Jason, what does this data overall tell us? I mean, do you see digital assets as the Visa, MasterCard of the future?
Well, it's hard to relate to Visa and MasterCard in the crypto space for me. I mean, Visa and MasterCard is a payment method, right? So I think that payment methods like direct payments or ACH or wires, people don't actually call them the payment method. I'm just sending a wire. Well, using a credit card or using a method like ACH or wires or crypto. Crypto is for us as a business supports merchants to be able to accept that form of payment. I believe that ultimately every bank, every payment service provider, every PSP, the likes of the PayPals who are now already supporting crypto, the likes of other payment systems, we're all going to move to crypto. And it's going to be the main point of method of exchange of value.
Oh, I was going to ask, because I'd love to get, because I know you're a really respected voice in the crypto world. So I wanted to get your thoughts on, if I were to ask you, Jason Butcher, if what the world will look like 10 years from now, what does it look like for you?
With COVID or without COVID?
Good question. Okay.
Preferably it's without COVID. But I really do believe that the form of exchange of data and information is going to be on a blockchain, right? So crypto is the transactional side of the exchange of value. Now, of course, blockchain and crypto are also used in things like NFTs and smart contracts and agreements. And if you really look at crypto as a whole, not just for transactions, not just exchange of value, but a transaction as a record of information that's sharing, it will all be stored on a blockchain, and it will all be some form of cryptographic solution that will be recording that exchange and having the ledger. I believe that's just the way everything is moving towards, especially when it comes to transactions.
So if that's what we're moving towards, I mean, a lot of our audience are investors, and I'm not asking you to give financial advice, but what are some things that you do to prepare for that future?
Well, I mean, from a business standpoint, we hold most of our income, most of our assets, all in crypto. I mean, we do definitely have the requirement and need to hold some funds in traditional fiat in order to pay some people who still only accept fiat as a form of payment. However, for us, we hold most of our assets in that, and that's because I guess we're investing, right? We're investing in the future value of what that crypto is going to be worth. And of course, we also look at new partnerships and new opportunities. And a part of some of the services that we may offer soon will actually be investment holdings and return on investment and depository pieces that are actually going to give a rate of return.
Jason, there's a lot of, I guess, FUD out there surrounding cryptocurrencies. And one thing that comes up often is that, cryptos are used for whatever illegal activities or spending. What's the one thing you'd want to dispel on that front?
Well, I mean, I think there's always stories around anything. The fact is that there's always elements around criminality in the traditional fiat space. There's lots of activity that are happening in physical cash, right? I know certain markets are looking to digital currencies to remove the usage of cash which is still used as the majority method of using money movement and or usage for illegal activities. The drug trade, etc., moving of money. Why would you use a platform like crypto when it's all recorded? Now, there is definitely usages. There's things like fraud, there's activities, there's hacks and attacks. But the same thing happens with banks. Banks get robbed every single day. You don't hear about your corner bank being robbed because they have facilities to protect them against it, and they don't tell everybody. Same with the credit card fraud today. It's $1 trillion industry that Visa and MasterCard are themselves working on, mostly blockchain and AI, artificial intelligence systems, to protect you, your user, against this fraud, and the merchants and the marketplace. So I think globally, as we're in the financial industry, we're all supporting each other to defend against the fraud. But it's just a part of it. It's very minor in our space, though. It's less than 5% of our transactions that we see on a blockchain.
I just want to get back to your data a second, because something else that jumped up to me was the regional data. And if we look at Latin America, Europe, North America, some surprising trends there, right, Jason?
Absolutely. I mean, the LATAM market is just blowing up. It is the growth in the last couple of years. One of the areas that we've launched recently is in Brazil. Brazil alone has over 2.5 million users of crypto today. Those are investors, people that are using crypto as an exchange of value within the country, and you see a massive growth in the other areas within Latin America. Of course, you probably have heard, one of them have launched Bitcoin as their main currency in Latin America, right? So I think there's a lot of growth in that because there's more news, more information. The change in their own local currencies are really affecting them, and they're looking at alternative methods. In Europe, of course, the laws, the regulations, the support around crypto has been there for a long time. And now we're also seeing a huge change in the regulations around space in the United States. We ourselves now are starting to get licenses, and they're starting to see much more support around crypto in the US alone. So we'll start seeing a lot of growth there soon too.
Interesting. I guess just final thoughts, Jason, I want to thank you for sharing the data with us. I know you do a weekly blast for media. I guess my question is, why share the data with us media folks or the general public? What do you want the people to learn from it?
Well, honestly, the data is available. The beautiful thing about blockchain and crypto is it's extremely transparent. And I believe that we should be the same way. You can see all the transactions and information that are transacting the CoinPayments right on the blockchain. And I believe that supporting growth and supporting transparency, we should be a part of that, and supporting merchants and supporting other individuals to see the growth. And I've started seeing other organizations that are in the marketplace starting to support transparency and sharing with their merchants their growth as well. So I think overall, it's information that we should be sharing.
Is there a feel-good story, not to put you on the spot, but of a one merchant that sticks out for you that completely saw their lives change since they adopted or started accepting or put in place a mechanism to accept crypto transactions?
Well, there's definitely a number of merchants. Actually, there's groups that I know. For example, I think we've promoted them and shared some of the stories to our newsletters, and of course keeping confidentiality of different groups, not to say specific names, but there are some individual merchants that have demonstrated to us that they saw huge increases in their business because they were able to accept crypto. And I think today we're starting to see organizations, major organizations, that are changing the way they accept these forms of payments, and they're seeing changes. They're seeing massive growth, and the adoption is really changing their business model.
So do you guys see yourself as a type of like what Uber did for the transportation industry that you're doing for the crypto?
Well, I don't know about that. That really transformed everything. But I do believe that we have been a big force in the process to support the industry, support merchants, support the e-commerce industry and the commerce space as a whole, to provide an easy platform for them to easily accept crypto.
Well, really fascinating data here. I was blown away by a number of transactions happening here. So
absolutely.
Very telling. Jason Butcher, CEO of CoinPayments, thank you for joining us here on StansberryInvestor.com.
Take care. Bye-bye.
Thanks for kicking off our summer series here. And thank you all for watching. We are just starting the series. We have a lot of incredible guests lined up for you. So be sure to tune in daily. That's it for me now. I'm Daniela Cambone.